Yo, what up, guys? We're going to be going over 3 dividend stocks to go all in on. And the funny thing is, I actually just bought all 3 of these stocks in the past 3 months as brand new positions. So in this video, I'm going to do a full deep dive on these companies. I'm going to show you all the numbers for yourself so you can draw your own conclusion. Most of these are dividend growth companies, so they have so much room to raise their dividend. Like United Rentals, for example, this is the first dividend stock we're going to go over. I'm only up 1% on my position right now. I think now is a great time to buy the company. Look at them. They're down 25% the past 3 months. And guess what? This company literally has room right now to 3x their dividend. They could 3x their dividend if they wanted to. They literally just choose not to. So let me show you why I am obsessed with this company and why I think right now's valuation is a great time to DCA into them, not financial advice. Look in the left there, the PE ratio. They're literally trading at 15 times net income, which is very fair, very cheap even. And look at the dividend yield right here. You get a 1.18% dividend yield. So yeah, the yield is only 1% right now, but my friends, let me show you how this company has room to 3x their dividends. So right now, the dividend cost $1.79 a quarter. They literally just started their dividend in 2023, and they already have a 1% yield. But right now, the dividend cost $1.79, and look at the earnings per share. It was literally $10 at just the most recent quarter. So I believe one day, if they wanted to, they could pay out $3 to $4 per share per quarter of dividends. So, and that's just looking at their net income. Look at the free cash flow per share. It's $10 to $20 every quarter. The point is it's well above the EPS, which is net income. But anyway, let me do a dividend payout ratio based off their most recent quarter of net income. So they've literally just made $689 million of net income. So remember that number right there, $689 million of net income, and the dividend only cost $108 million. So that's why I'm saying this company could 3x their dividend to maybe spending $300 million a quarter and raise their dividend like crazy. And I believe that because look, they're literally doing that right now, but instead of spending that extra $300 million on dividends, they're spending it on buybacks. So this is another huge thing I love about this company. They are buying back their own stock like crazy. So you now own 3% more of the company than you did 1 year ago on top of the 1% dividend. So they literally spend 4x the amount on stock buybacks than they do on dividends. So that's what's really cool. Literally they're spending like $400 million a quarter plus the dividend. They basically return $500 million to the shareholders back every quarter. And look at the total long-term debt. Again, they make over $2 billion a year, so they could pay off all their debt in 6 years if they wanted to. They don't have to right now because they're just buying back their own stock like crazy. So that's why I believe United Rentals will be a fantastic dividend growth stock for the future. They actually have the largest market share for rentals, like for specialty renting and stuff like that. So if I actually pull up URI right here, you could probably just guess by their name they do rentals because they're called United Rentals. But look at this right here. They have their specialty rental business, and look at the growth of just this segment of business. This is up incredibly. It's up 30% year over year. So the specialty business is growing like crazy. Pretty much all the revenue is here in the United States. But yeah, let me know your thoughts on United Rentals. I think this will be a phenomenal dividend growth company. Again, they have a really low payout ratio. They have room to double, triple their dividend. They're spending so much on buybacks, and they were spending like 300 million a quarter on buybacks up here at like the $700-800 level. So I know for a fact they're going to be buying a lot more shares, probably down here at the $600 level. And at this PE of 15, I don't blame them. So anyway, that's United Rentals. That's the first stock I wanted to go over of an incredible dividend growth company to go all in on. And I kind of do, I'm kind of biased because I own them. But this next stock I want to go over is actually here in my Mumu portfolio. We're actually up 1.9% today. That's because of Comfort Systems right here. This is the next dividend growth stock we're going over. And my friends, this company has just the most incredible growth prospects ever. They're up 6% on the day. I decided to buy a share yesterday at $300, but still our average cost is, $374. So you could still get in at a lower average cost basis than me. And here's why I think this company is at a good valuation. The PE ratio is a 22. Historically, that's, in line, trading at 22 times net income. So they're trading at 22 times net income, and they're still growing like crazy. Look at their mechanical segment. This is up 42% year over year. So that's some incredible growth on just their mechanical segment business. Look at their electrical segment. This is up 23% year over year, also to a new record. So Comfort Systems actually repairs HVAC systems. And that's just one little tiny part of their business. But look at the EPS, for example, the earnings per share, which is net income, that's up 60% year over year. Yeah, look at the net income growth. It was up 60% year over year. The sales were up 37%. So look at that. The sales were up 37%, but the net income was up 60%. That means they're expanding their margins. So yeah, look at that. Their margin went from 6.7 to 7.8%. So they're growing their margins. They're expanding their gross margins as well. The free cash flow is up 15% year over year. So this is a very profitable company. And actually, let me go do some analysis on Webull for you. This company actually raises their dividend insanely fast. They don't just raise it every year. They raise their dividend like every 2 quarters. Like, look at this. Last quarter it was 35 cents, then it was 30, then 25. So they're raising their dividend faster than just once a year. And that's because the yield is still pretty low right now. The yield is only 0.5%. So I get it. It's a 0.5% yield, but you guys, you won't believe how low this payout ratio is. So literally in 1 quarter, they made $145 million. So just in the most recent quarter, they made $145 million. Let's see how much their dividend costs. So literally just in 1 quarter, their dividend costs $12 million. So this company's payout ratio is like a 7%. They have an extremely low payout ratio, and the cost of their dividend keeps growing because they're raising their dividend every quarter. And I like that. It's still only $12 million. And they're not diluting you as well. Look at that. They're actually buying back their own stock. They're spending just as much on buybacks as they are on dividends. And I think they're about to go insane on buyback mode. I believe, especially at this $300 level, they probably are buying back around 100 million of stock, because look at their cash right now. They have a record amount of cash, $500 million. $500 million or 550 million is like 6% of their market cap. So literally 6% of this company's market cap is just their cash. Double check me on that. Yeah, look at the gross profit. I mean, this is why the company deserves to be doing so good. I mean, they're obviously 40% off the peaks. That's why I'm buying them. Yeah, the diluted weighted average shares is down 0.5%. So you get the 0.5% dividend, 0.5% buyback yield. And look at the total debt. Remember, they have 550 million of cash and total debt of 68 million. So they have no net debt. Their debt has just been going down. So this is a really great growth company, and I do own them, so I might be biased, but I love the dividend growth on this company. And if you're not in a position where you need dividends right now, and you can just you want a company that you can let the dividend just grow and let them do stock buybacks and appreciate in stock price, I think Comfort Systems, kind of like United Rentals, will be another great dividend growth company for the long run. So yeah, that's ticker symbol FIX. I do have 11 shares of them, and they're now my largest holding here in my Moomoo portfolio. They're now larger than Powell Industries. Dude, Powell Industries, side note, is trading at a 13 PE, and they have no debt. I think, is it like 20 or probably like 15% of their market cap is just cash right now. So 15% cash. If you do an X cash PE, they're trading at less than 10 times net income, and their net income is expected to grow. Anyway, Powell Industries, that one could be an attractive one, but that's not the last stock we're going over. The last stock we're going over is a company I actually just bought also here in my Moomoo portfolio. This is ticker symbol APH. This is Amphenol Group. You've probably never heard of this one before, but I just bought my entire position over the past couple of days here. So literally in the past 5 days, I've bought, let's see how many shares, 22 shares, which is $1,300. So let me show you why I am so obsessed with this company. I love how diversified that they are. Like, check this out. They have their communication services. Look at this. This is up 43% year over year. That's an incredible growth rate, 43% up from the previous year. And look at their harsh environment solutions revenue. This is so niche, and that's what I like about them. They're kind of in the aerospace industry. I'll look at their investor presentation after this, but the sales are up 39%. Now, what about their interconnect? So that's up 5% year over year. Not as great, but again, these two segments of business are growing incredibly. Yeah, look at that. They always beat what the analysts are expecting. The orange line is what the analysts are expecting. They're constantly beating on that. Look at the net income. It's up 44% year over year. That's incredible. The sales are up 30%. Net income's up 44%. So that means they're expanding their net margin as well. Yeah, they have a 17% net margin right now. But let me show you their dividend payout ratio, because this one actually has a dividend yield of over 1%. So this one has a bit of a higher yield. Yeah, 1.06% dividend. And look at the forward PE. It's a 26. They actually just bought a company called Carlisle Interconnect. So that's why their sales are up 29%. It's not all organic, but that's all right. That's why the forward PE is way lower than the trailing 12 months. But yeah, look at this net income in the most recent quarter. This phenomenal, and it's real. Look at their operating profit, the net income. It is now 752 million just in the most recent quarter. So remember that number. They made 752 million just in the most recent quarter. And look at the cost of their dividend. It's only $198 million. They just rose their dividend by a huge chunk. That's why the dividend just went up. But I am incredibly impressed with this company. We can see their cash on hand right now. Yeah, look at that. They have $3.34 billion of cash. That's a lot of cash right now. So $3 billion in cash, another $2.5 billion in inventory. And what's their debt? So yeah, total debt of $6 billion. Yeah, the debt just went up, but they literally have half their amount of debt just in cash. And they're making like 800 million of net income a quarter, so they could easily pay that off. Nothing too concerning there. What about buybacks? So yeah, look at that as well. This company is buying back their stock every single quarter, so that's a great sign. Shareholder friendly company. They're doing buybacks, they're doing dividends, and they're also doing M&A. They've actually acquired over 50 companies since they've been public. That's one of the things they have on their investor presentation. So I'll show you a quick few facts about this company on their investor presentation. I think this will impress you. So here we are in their investor presentation. Check this out right here. They have a disciplined acquisition strategy. And like I said, they have more than 50 companies acquired actually just in the last 10 years. So that's very impressive actually. And we can see what industries that they're in. Let me find this out right here. So yeah, these are just some of the parts that they make. I guess they're in all these different industries. They make parts for engines and airplanes and electric vehicle charging stations and I guess windmills. So all these little devices here, that's just one segment of their business. Our high-speed, low latency interconnect solutions are enabling artificial intelligence. Yeah, you need low latency if you have a data center or something. In September 2023, we acquired Power Interconnect Solutions Connor Manufacturing. So they now manufacture or they own the manufacturing plant, which is kind of cool. We closed the year with 95,000 workers, or Amphenolians is what they call their team. That's pretty cool, I guess. But yeah, key trends driving long-term growth: clean and efficiency, connected, high speed, harsh environments. So yeah, they make these harsh environment interconnect cables. Apparently, yeah, so they're in the defense and commercial aerospace. They're in the automotive industry. They're in industrial information technology, data, mobile devices. I mean, I just don't want to read everything here, but if you'd like to check out their investor presentation, you can just go over to their website. But yeah, if you found any value in this video, I really would appreciate if you drop a like on the video. It really would help me out. Yeah, here's some of their key products right here that you might find interesting: fiber optics. But yeah, hope you have a great rest of your day. My name is Nathan Robert. If you leave a comment on the video, I'll reply to all of them. And please drop a like on the video. It really does help me out a lot. Seriously. Hope you have a great rest of your day. See you later.